Hello and welcome to today's Hotspot Hunters video. Today we are looking at a fantastic location where one of our clients was able to double their money in just 21 months. We're going to tell you all about it and why this location is an absolute ripper. Okay, first up, let's look at the numbers so you can see just how good this location is. Our client is a couple named Nikki and Kesha. They bought the property for $430,000. They've actually bought 3 properties with us. Today we're looking at the second property. We'll look at the other purchases in other videos because they were in different locations. Now the rental yield on the property was 6.4%, so that's a fantastic yield, great cash flow. And the capital required for the purchase was $82,825. 21 months after the purchase, they got a valuation done in June of this year, 2023, and it came in at $513,000. That means the total percentage growth since the purchase is up at 19.3%, which is pretty amazing given that this is a time period where a lot of other suburbs stayed flat or didn't grow at all. For example, between October 2021 and June 2023, the prices in Manly and Sydney went down from $4,467,500 to $3,925,000. Now, I'm not bashing Manly. Great place, but it does go to show how important suburb selection really is. Okay, now back to Nikki and Kesha's numbers. The total growth since the purchase is $83,000, which puts the return on capital invested at a very tidy 99%. Pretty impressive to do that in 21 months when, as we saw, a lot of places were staying flat or going backwards. Now, a little bit about our client and what they were trying to achieve, because this is really important. Everyone's circumstances are different. Nikki and Kesha are a project engineer and an account executive respectively. Crazy hours and really felt like they had nowhere near enough time to spend with their kids. Familiar story? I know. They realized they couldn't save their way to wealth as they're both salaried employees, so they've set to work to build a property portfolio that will get Kesha into semi-retirement. So, time to reveal a location, but before I do, here's our Hotspot Hunters special message. And now, back to the video. Okay, time for the location. The location is Frenchville in Rockhampton, Queensland. As you can see from this graph here, this particular suburb has performed fantastically over the last 2 years. We were able to get in right here in October of 2021 when our forecasts were looking really positive. These data actually come from our AI model, which has been specifically developed to analyze literally millions of data points relating to property and has determined the key factors that will produce this kind of growth, and it now actually functions as a predictive model. It's an incredibly powerful tool. There's nothing else like it. It actually pulls in more than 4 million data points across Australia and feeds them into producing the results we get. So great work from the research team. We've got a great location here. And as you can also see, the growth is projected by the model to continue. The current median sales price is at $415,000, which is predicted to surge between $462,181 and $515,313 over the next 15 months. This projected increase represents a robust median sales price growth forecast of 17.42%. Now, the rents in the suburb have also pumped pretty impressively, as you can see from this chart here as well, with the rents expected to increase by well over the 5% threshold we're hoping for. So, Nikki and Kesha got the right property in the right location at the right time. So now, let's look a little bit into what specific factors made Frenchville pop up in our analysis as being an excellent property hotspot. Well, there are 2 factors that really stand out when it comes to Frenchville, and we're going to look at those one by one. First, the key market indicators. The housing market in Frenchville has been experiencing significant changes over the past few years. On the supply side, there has been a gradual decrease in property availability, with the number of properties available dropping from 102 in August of 2020 to just 50 by July 2023. This reduction may be attributed to various factors, including rising production costs and new regulations that limit constructions. But despite this decline in supply, demand for properties has surged significantly during the same period. The demand to supply ratio, or DSR, which was at a balanced state with a value of 1.63% in August of 2020, skyrocketed to an impressive 4.32% by July 2023. This indicates a very strong buyer's market. It's well above what we call the equilibrium points between 0.75% and 2%. In rental terms, similar trends can be observed, where rental vacancy ratios have seen slight fluctuations but generally remained below the national average, hovering around that 1 to 2%. This means there are high occupancy rates and strong rental demand, which is why we saw substantial increases in median weekly asking rent over a whopping 66% increase within 5 years. As such, these factors combined yield an attractive gross rental return rate peaking at around 6%. Now, before we go any further, it's time for a special message from Goose.
Hi, it's Goose here from Dashdot, and since we're talking about hotspots, there's something extremely important that I need to tell you. I also want to give you a valuable gift too. You see, whenever you hear of someone's property investment crushing it, it's not singularly because they chose a booming suburb. There's more factors than just location that go into investing in a winning property. The cash inflows and outflows matter. The volatility of a suburb matters, and most important, will a particular property in a particular suburb help you reach your end goal? Which is why, on that note, I'd like to offer you an incredibly valuable tool for free. It's called the Apex Report, and you'll get details on how to get it with my compliments absolutely free below. Put simply, the Apex Report instantly checks if your next property investment makes financial sense, tells you exactly how much you can afford to spend on the property, gives you an accurate return on investment calculation with the touch of a button, and shows you when and how to maximize the value of your investment. The Apex Report is a proprietary tool that we use to help our clients get an average return on invested capital of over 61% in their first 12 months, which is why if you're thinking of buying an investment property anytime in the future, you must get your hands on this report now. It's yours free for a very limited time, so click the link and get your copy now.
Thanks, Goose. And now back to the next key factor that we analysed when it came to assessing Frenchville. As you know, when it comes to property, we often look at infrastructure, and there's a heap going into Frenchville, with projects totaling an estimated cost of around $45 billion. These investments aim to bolster energy sectors, strengthen transport infrastructure, and enhance community facilities. In other words, it signals confidence in the suburb's growth potential. And that's before we look at Rockhampton as a whole, which has even more going into it. And remember, Rockhampton is really a cattle town. It isn't dependent on mining or anything that runs in boom and bust cycles or anything like that. So long as there's demand for Australian beef, and there's plenty of that, Rockhampton is looking good, and Frenchville is fantastic. Well, that's everything for this video. I do hope you enjoyed it. If you did, please smash that subscribe button so you can stay up to date with more amazing results and high-performing hotspot locations from us here at Hotspot Hunters.